Trading the close. My name is Gareth, Soloway, Chief Market Strategist here at VerifiedInvesting.com. Interesting day today. Volume was light. We saw a big run out of the gate. The mega caps were up. The Russell was up. And then throughout the day, we started to see a fade. A lot of the mega caps going negative. And even late in the day, Tesla starting to sell off and has come back in significantly. So what does this all mean? What does it tell us about the rest of the week? For me, it tells me volatility is likely to kick in. In fact, the VIX is starting to uptick just a little bit. I have a wedge pattern to show you. We get a breakout on that. You can see 30-40% upside on the VIX here very, very quickly. So we have to watch very carefully. It tells me something is going on. Big money is starting to accumulate. I just want to quickly go into the S&P. We're going to go right ahead to this portion here because I want to look at what we're seeing. So here's the S&P 500. If we look at the chart, this is the start of the day. So this is where we ended Friday with a heavy sell-off on heavy volume. And I speculated on Friday that it looked like early in the day the institutions allowed the retail investors to kind of push money into the market, buy the dip from the big down day on Thursday, and then the institutions dumped right into them. Then we came into today's price action, the market's opening up, we pushed up, we then reversed, and then another pretty big sell-off right here into the end of the day on heavy volume again. So to me, when you start to see these heavy end-of-day sells, it's starting to give me a heads up that big money is using the end of day to dump in, knowing that they have to unload these bigger positions. So it's just a warning sign. And by the way, we've seen people, again, Jeff Bezos is unloading massive amounts of shares of Amazon. That was just reported recently, something like another $1 billion+ that he's unloading. A lot of these insiders are continuing to sell. Granted, we are in a quiet period now, so most of them can't. But nonetheless, they are doing this over the course of the last, basically since start of the year. Okay, so again, a little bit of a downshift into the end of the day here. I do want to pop up a couple key charts that I've been watching. If we go to the spiders on the daily chart, I showed you guys this chart last week. Take a look at this. This is the S&P 500 daily chart, right? So that's basically the S&P. If we look at this, there's this beautiful channel where we kept on bobbing up against the high end, right? All along here, just bobbing up against it, but could never break above it. Then we had the rollover right here. And remember, this is where the S&P equal weight went down and the regular S&P went up because the mega caps took control. Well, what did we see? Well, the mega caps took control, took us to the underbelly, and underbelly. And where are we right now? Keep on getting pushed down by institutional selling action right at the underbelly of this line. So to me, again, unless we can break above this, you have to favor a pullback, at least in the near term, like we saw right here and right here. Now, could they be very shallow? Yeah, they could. We don't really know. I mean, as a technician, all you know is that you're at resistance. You don't know what type of pullback you're going to get. Is it going to be super shallow? Is it going to be a bigger pullback? So right now, it's a wait and see in terms of the market action as we are coming into the end of the day here. Okay, a couple other things on this chart just to be aware of. The markets remain very elevated and extended. A lot of that is the mega caps that we know about. The smaller caps are continuing to run. In fact, if we bring up the IWM here, the Russell, we can see that again, we have had quite the move up. The Russell today is up almost 2% on the day. Last week it was up 6%. So that's over basically an 8% gain in a week and one day. Huge for a stock market, a market itself. But again, what's happening here is this whole market was so depleted that it wasn't at a valuation that even made sense for small and mid caps. And we can see right here very clearly this was your previous all-time high on the Russell, and you're not even back to that, right? So you know, this is in comparison to the S&P and the NASDAQ that's been making new all-time highs almost daily. So 2021 was the high here, never even got close. So you're starting to see what we call the great rotation. Money being sold from Microsoft, sold from NVIDIA. NVIDIA down today, last I checked. Microsoft down. Meta's down. These type of stocks that they've gotten way overdone to the upside. Money's being pulled out, and it's rotating into these plays here inside the Russell 2000, which is mid and small cap. By the way, I've talked about this before, but I'll mention just one of my favorites. It's not an endorsement, obviously, but we have this one here, Zoom telecommunications or video communications. Nice little day again today. You can see it's coming right off of the lows here. It's just been beaten down like crazy since COVID. COVID ended, and most companies are still using Zoom. I mean, that's just the nature of the beast. And so I do think that something like this, trading at a forward PE of 10-ish, there is some sort of value there in the chart. Okay, a couple big names here moving today. We have Apple, which is off of its highs, but look at this, guys. Look at what we have here. Classic channel, so we know our channels work very, very well to denote resistance and support. And if we look at this right down here, we hit it right here, we hit the high end here, and what did we hit today on the gap up? Right into that level. What does this imply? What are the probabilities? The probability, some sort of check back, maybe to the midline here, maybe lower, maybe down here, but in the very least, a check back per technical analysis, just like right here. We kind of checked back right to this center line right here before making that next move to the upside. Okay, so just always be aware. Just because there's headlines, like today we heard from Apple that they had a 33% jump in sales out of India. That's what kind of kick-started the move up on that. That's great, but remember, the stock probably smart money, when people that are in the know, and I shouldn't call them smart money, it's people that have insider information, they already knew, and that's probably why the price was going parabolic on Apple recently, right? So again, just so important to understand the metrics of who has information and that stocks are usually pushing into that. We take a look at Tesla today. Tesla to me, and by the way, if you were watching today, the Investment Empowerment Day, the 2-hour live that I did this morning, I added a short this morning above 260 right here. Right there, and look at that on Tesla. We're back to 250, 270. I know some people in that were even commenting that they made money just on that trade alone, and we also had a Celsius, and I'm so proud. You know, people out there that were watching, it was free. This was a free thing. I was doing a live day trading room, the Apex live day trading room. They were making money on the Celsius trade that we made money on. It was just awesome to see. It was really, really cool to see. And again, that's what we do every day inside the Apex live day trading room. In any case, my point is this, is that as of now on Tesla, this is still the top, okay? Now, why do I say that? Well, because that's what the candle signals. If you look at 1,000 of these candle formations that were big reversal engulfing candles, they are denote tops until proven otherwise. Now, can it be negated? Heck yeah. Every pattern can fail. Every candle pattern can fail. All it needs is a close above there. So unless that happens, that is the dominant signal, and you can see, again, the price on Tesla coming in just a little bit. And by the way, as a technician, I couldn't care less whether it's a great company, if it's not. I'm not passing judgment on the company itself. I'm simply looking at the chart. This could be rocks. This could be whatever. It doesn't matter what the chart is. It's just you show me a chart and you don't even tell me the name. I'd say, okay, that's bearish. That's it. That's it, right? And so I always want to say that because people always take offense, like they're so hardcore on Tesla or they're so hardcore on Apple or whatever. And frankly, it doesn't matter. As a technician, if you're a true trader, you're trading the chart, not the individual company. Remember that. Very, very important. All right. Next up, let's go to quickly look at the VIX. Take a look at the VIX here, guys. The VIX has what's called a wedge pattern. This is what I talked about, right? So basically what a wedge pattern is, it's coiling. Price is coiling inside here, and eventually at this head, somewhere these lines meet somewhere out here, this is going to be forced either to break out or break down. Now, could it break down? Yes, but it's already at historic lows, almost at lows that we haven't seen in literally years. So it implies that we probably get a breakout. When you get a breakout, you should see a very sharp rise. That's how wedge patterns work, right? So you have a wedge pattern. When it gets a break, it's not just, oh, it's a little break like that. It's usually a spring has been wound, and it's like boom, like that. That's the much more likely scenario. What that implies is that fear is going to spike at some point in the not too distant future. Now, it still could stay in here, so it may not be tomorrow or the next day, but remember, we have lots of earnings coming up. We have economic reports coming up this week, retail sales, Netflix earnings, more bank stocks reporting. So there's a lot of catalysts in going into next week, some major companies reporting earnings that if they say anything that doesn't go with this perfect narrative, like let's say the NVIDIA doesn't report for a while, but let's just say ASML, which is a company that's a chip company out of Europe, if they start really talking anything bearish, it could really hurt the narrative of this chip data center AI kind of story, and that could be a catalyst for, what's going on? or if the economic reports continue to show more and more weakness, that could be an issue as well. All right, so that's a good one right there to go over. Lastly, I do want to go over gold. Then we'll look at Bitcoin as well as oil and natural gas. Guys, I've been telling you about a level on natural gas. We basically kissed it today. I'm going to show you that chart in just 1 second. Gold, what do we have here? Well, we had this little wedge pattern, right? And here you have your wedge. We just talked about wedges. Notice how it wasn't just a little breakout. Once it happened, boom, right up. Where did it go? Right into double, triple top right there. Classic resistance. It did get rejected, though. So as of now, you don't have a breakout. I want to show you something. So let me actually take this away. I want to take this one line away. So what you have here is this sideways chop. Notice this pattern. 1, 2, and then usually this is what happens, and then you break out on the 4th or the 5th hit. The reason why I'm showing you that is because if we go to this pattern back with the former breakout, I'm going to zoom out here. We're going to go all the way back to when gold was trading below 2,000-ish. What do you see here? Same pattern, just on a bigger time frame. So this is where we currently are, right here on the gold move on the current chart. But now I'm going back to 2020 through 2023. But look, so this is where we are. You get a shallow pullback, tiny little check back, and then the breakout, right? So again, notice how patterns replicate over and over again. It's not because there's something weird in the charts. It's because these are humans trading, and humans don't change their stripes, right, or their dots, or whatever you want to call it. We tend to behave in the same way over and over again, which is why technical analysis works. Again, it almost makes me wish technical analysis wasn't called technical analysis, but like human behavior analysis, be a much more accurate, denotation of what the charts are showing us. Okay. Next up, let's quickly look at Bitcoin, which actually is looking to potentially break out. Bear with me as I type it in correctly. There we go. If we go to Bitcoin and we go up to the current lines here, we can see that yes, we have closed. Looks like to me we'll close above this little wedge pattern resistance area, but watch for confirmation. If it doesn't confirm, don't trust it. Don't trust it. Too many weird things go on here. In addition, look at where we currently are. See this little pivot top right here? We're right into that. So this is a big area, and the question is, can it confirm the breakout back above this level? If not, you could easily trade back down. If it can confirm, I honestly think we're headed right back up here to about the 70,000 marker. So tomorrow's a big day for Bitcoin. Can it confirm the breakout? Next up, let's look at silver real quick. Silver continues to struggle here, guys. So listen, it did have a breakout like gold, but notice gold has done really, really well over the last couple sessions. Even today, even though gold backed off, it was still net green. Silver is down. Silver was down on Friday when gold was up pretty big. The key here is this, is that you're starting to get more and more weak economic news. Silver, as much as it is a store of safety like gold, it's also an industrial metal. Therefore, it has implications based on the U.S. and global economy. It's going to make it a little tougher for it to rip higher if the U.S. economy is really stalling out. The best bull moves you get in silver oftentimes are when people think the economy is accelerating. That's when silver demand is going to go even higher, even if gold is stalled out a little bit. All right, so keep an eye on silver there. Last couple charts, we got to look at oil. Not a whole lot to report on oil. This is still kind of doing exactly what we talked about. This was that mega resistance zone right up here, all those trend lines coming through. You pulled back into this level, small check back. Now should be the next move to the downside. That's what I think is going to happen, at least based on past technical charts. Doesn't mean it will happen. That's just looking at, if you look at 1,000 of these charts, that's what happened a majority of the time, or what should happen a majority of the time. And lastly, natural gas, guys. This one's the most exciting. Take a look at this. Look at that downdraft. I still remember someone posting a question saying, hey, this is when natural gas was over here. Like, shouldn't we be buying natural gas? It's down so many days in a row, blah, blah, blah. No, not to the Widowmaker. Don't do that with the Widowmaker, guys. There's a reason why they call it that. Wait for the levels. Now we're finally coming into the level that I gave you guys literally 2 weeks ago. I said, this is the zone we're looking for. There's a 618 Fibonacci here. There's a pivot point right here. There's going back to levels. There's an upsloping trend line. This is the kind of the confluence. Just like oil was trading up, price of oil was trading up into like 3 trend lines up here. This is the same on the reverse here. Now, again, do I like natural gas as a long-term investment? No, it's trading. I'm a trader. So anything I'm giving you guys, really there's no judgment on longer term. It's nothing like that. For me, This bounces like this, I'm probably going to take profits and run. That's what I do here, folks. That's what I'm guiding in and teaching you guys, kind of looking towards these type of setups to trade. All right. On that note, guys, I am going to step aside. I got to get back to looking at the charts, so I'm ready for the game plan tomorrow at 9 a.m. Don't forget, guys, all the courses on Verified Investing are discounted heavily. Last sale we're going to be doing here, so make sure you take advantage. 60% off on the Winning Trader series. It's a no-brainer. Seriously, you guys see what I do here on a daily basis. Learn that. Everything that I do here that I know is in that course, the Winning Trader series. All right, have a good one, guys. We'll talk to you soon. Take care.